So Donald Trump was arraigned today, and then his NFT pumped. It appears that the US dollar is facing even more issues in terms of being dethroned. We'll discuss that and more today, right here on Pour Over Finance. Welcome back. Welcome back. We want to thank you for joining us. If you appreciate what we do here at Pour Over Finance, please go ahead and hit the like button and subscribe if you want to see more. But with that aside, we'll jump into our articles today because it was a very interesting day, as it usually is. But today, a little bit more so than normal. Our buddy Donald Trump pleads not guilty to 34 counts of falsifying business records. Article goes on to say, Donald Trump has officially entered a plea of not guilty to 34 counts of falsifying business records in the first degree in connection to a hush money scheme that took place back in the 2016 election. Now, if you don't know what this is about, back in 2016, Donald Trump, he was running for presidency. And apparently he used campaign funds to pay hush money to a former adult actress, Stormy Daniels. And these fraudulent charges are one of many charges that were brought up against him in New York City. He arrived in New York City on Tuesday, the 4th, which is today, and he pleaded not guilty. And on the news of that, which is the real reason that I'm bringing up this specific article here, his NFT has spiked. How interesting is that? You cannot defeat crypto investors. They are always chasing the dollar. So let's go on to read what we have here. It says Trump's NFT sales spiked following the ex-president's arraignment in New York. In the hour after the 45th president was arrested Tuesday afternoon, I don't remember him being arrested, but okay, he was arrested. The collection saw 30 sales, a 462% increase after a long period of token holder dormancy. So the dormancy that it's speaking about is the fact that the NFT came out, I believe it was in 2022. There was a bit of a spike, but then following that spike, it kind of just disappeared. No one was talking about it. It didn't do any kind of damage in terms of really making money. This was around the time that I believe the whole Truth Social network was deployed. But since then, it hasn't done anything until now. We'll continue to read what the article says. It says Donald Trump's non-fungible token, NFT, collection saw a surge in sales after the 45th president appeared in court on Tuesday in New York City. According to data from OpenSea, which is the Ethereum NFT marketplace, Trump's digital trading card holders collectively sold 30 tokens in the hour after his court appearance, which was a 462% increase and 47 over a 6-hour period. Not bad. Though it was a large jump, it is also a relatively small amount of activity for the NFT space, which is something that I can understand because if you remember during the last bull cycle, NFTs were the big thing. We had all kinds of companies signing on for NFTs, and it was a multi-billion-dollar market. So as it stands right now, we're still in a bear market, and this is a decent bump, but it's merely a drop in the bucket for the overall NFT market. But again, like I was saying before, where there's money to be made, cryptocurrency investors are going to try to find it. Listen, if I was even remotely interested in this, maybe I would have jumped into the bandwagon. But I can see that this NFT would do really well if he, for some reason, wound up in prison or he became president again. I could see this pumping. So this is probably just a little bit of a little bit of foresight into what we can see happening if Donald Trump actually does either go to jail or, like I said, become the it'll be the 47th president of the United States. So I don't know. If you're interested, look into it. Me personally, I am not advising anyone. I personally will not be investing in this. But listen, good news and bad news always leads to some sort of activity, whether it be pumps or dumps. So if you want to take the risk, potentially there's money to be made there. I will not be getting involved. I'll have to wait to see what's happening with Sir Trump on all of this hype around him being arraigned and arrested and potentially facing jail time. That said, we'll jump into our next article here, which is basically surrounding the US dollar, like I mentioned yesterday. And if you are a subscriber to the channel, if you have not checked out yesterday's video, check it out. It basically touches on the fact that Russia is now trading yuan for oil. And it's the first time that they actually saw the yuan outpace the US dollar in Russia in terms of currency for, trades. So this article goes on to say, we'll just scroll right past the dirty fingers on the American dollars over here. But the headline says that Anwar, Malaysia, China to discuss Asian Monetary Fund to cut the dollar dependency. China is open to talks with Malaysia on forming an Asian Monetary Fund, said Prime Minister Datuk Seri Anwar Ibrahim. That's a full mouth right there. Amid the world's growing impatience with the dominance of the US dollar. And I'll touch on that in just a bit. Anwar said he proposed setting up a fund at the Boao Forum in Hainan last week, stressing the need to reduce reliance on the dollar or the International Monetary Fund. And from my understanding, the International Monetary Fund is basically an institution that basically bails out international allies in times of financial stress. So I'm assuming they are somewhat associated with the USD, because why else would he want to move away from them? Anyway, continuing on, it says, when I had a meeting with Chinese President Xi Jinping, he immediately said I refer to Anwar's proposal on Asian Monetary Fund, and he welcomed discussions, Anwar told Parliament on Tuesday. So from my understanding, this Asian Monetary Fund is something that Japan originally proposed back in the late 90s. Clearly nothing came of it, but I believe that Anwar, which is Malaysia's prime minister, is looking to potentially reinvigorate that as they attempt to move away from the US dollar. Continuing on in the article here, it says there's no reason for Malaysia to continue depending on the dollar. He added Malaysia's central bank is already working on enabling the two nations to negotiate on trade matters using the ringgit and the yuan. I'm assuming the ringgit is Malaysia's domestic currency. This is what was said by Anwar, who also doubles as the finance minister. Both the prime minister and the finance minister are the same people in Malaysia. That is very interesting. Anyway, continuing on with the article here, it says, but now the strength of the economies of China, Japan, and others, I think we should discuss, at least consider an Asian Monetary Fund, and secondly, the use of our respective currencies. So now here's my problem with this. Okay, I understand. You consider the U.S. to be dominant. You consider the U.S. to be strong. You consider that the U.S. has too much power. I understand that, and you want to move away from the U.S. dollar. That all makes sense to me. What does not make sense to me is the fact that you're pretty much taking power away from the US dollar and implanting that power into the Chinese yuan. So how does that exactly help? Now, don't get me wrong. The article does say that he also wants to trade using ringgit, which, again, I'm assuming is the Malaysian domestic currency. But with all of these nations, we have the BRICS nations, we have Russia, we have Malaysia, potentially Japan. We have all of these different countries that are looking to move away from the US dollar. They're looking to no longer depend on the United States. They want the power taken away from the US. I understand that. But then you take all of that power and implant it into China. Does that not build the same system that you're trying to move away from? You're giving one government all the power in terms of monetary control. So how exactly does this resolve any problems? Does that not mean, for instance, the US dollar has had dominance for close to a century. Does that not mean that further down the line, you just lead with extreme Chinese dominance, which they have quite a bit of dominance at the current time, but you deal with even more? And from what we know about China, they're not exactly the nation that you want to place all of your power into. Unfortunately, the United States kind of did that. All of our trade is in China. But I just don't understand what the ultimate goal is here with all these different nations that are combining their efforts with China to trade in the yuan. You're just doing the same thing that you're running away from. I don't understand it, but we'll have to continue to see where this is going. We'll have to continue to see what the ultimate goal is here. And as developments happen, you can be sure that I will be here to provide that detail for you. So feel free to hit that subscribe button. Anyway, as we move away from the loss of dominance with the United States dollar, we move into the final article I have here for you today, which is a little bit of some good news among all this bad news that's happening in the financial markets and crypto and all of these different forms of assets here. But it says institutions are extremely interested in crypto ETFs, but buying has cooled, which is a survey that was taken. It says almost half of the fund managers surveyed plan to add crypto ETFs to their portfolio in 2023, but only a quarter will be increasing digital asset exposure. So what that means is they're willing to put their money into ETFs that cover the broad crypto market. However, they're not willing to expose themselves directly to the currencies. And I can understand that, because when you become a crypto investor, that means you have to first on-ramp your money into an exchange, then buy these cryptocurrencies. And if you don't trust these exchanges, which you probably shouldn't, you would then have to self-custody that money, whether it be with a cold wallet or a hot wallet. And if you are going to do that, there's a lot of things you have to learn. There are potential risks, and not a lot of investors want to deal with that. So how do you get around that, but still get exposure to the potential growth of the crypto market? ETFs. And that's exactly what this is mentioning here. So it goes on in the article to say that institutional interest in cryptocurrencies hasn't budged despite the market being down 60% from its all-time highs, as a majority of asset managers stated they're extremely interested in crypto-themed exchange-traded funds. It's the same as with a REIT almost. There are people who don't have the money, nor do they have the desire to be exposed to the real estate market. So what do? They buy a REIT. As the real estate markets go up, the REITs get some gain, and you make money. And then REITs have to pay out 90% of their profits in the form of dividends. So it's a good dividend stock to own if you're interested in the real estate market. So I understand why people, in terms of investors, would be interested in ETF but not be willing to specifically go buy Ethereum or Bitcoin. It's fully understandable. Scrolling further down in the article here, I thought this part stood out to me. It says more than 40% of the respondents claimed to manage assets worth more than $1 billion, and over half said to have more than a quarter of their portfolio invested in ETFs. So these are people that are interested in ETFs. They're managing massive funds already. So it just makes sense. But what do you guys think? Are you guys eventually going to be getting yourself invested in some Bitcoin ETF or just a crypto ETF as a whole? Or will you just be exposing yourself directly to the currencies? Me personally, I'll probably do both. Even though I think it potentially would be more profitable to just invest in the specific coin. But with an ETF, it's sort of like a basket of funds. So you could potentially get exposure to Bitcoin, Polkadot, Ethereum, any cryptocurrency that ETF may be tracking. And let's just say for some reason Polkadot isn't doing too well, but Ethereum and Bitcoin are up, then your ETF is still going to perform well. So it also gives you a little bit of a cooler risk climate when you go for an ETF over investing directly in these coins and then having to custody these coins. And there's a lot of risk associated. So I can personally understand that. But that's what we had for you guys today. If you guys enjoy what we're doing here, like I said earlier, please go ahead and hit the subscribe button so you can get more news as we deliver it to you. Hit the like button so that we can get some exposure going on this channel. And all in all, just hope you guys are having a great day, and Poor Over Finance loves you. Have a good one, y'all. Peace.